All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle live pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And as always, we're so happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we can take advantage of in this Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. And we always start our morning with a very, very strong foundation, right? And the action credo. We want to make sure that we are accepting all possible losses before entering a trade, preparing you for any outcome. We want to make sure that we center ourselves in mind, body, and spirit, ensuring a balanced approach to trading. Let's make sure that we trust in our education, strategy, trading skills, and intuition. And let's imagine our trades successfully materializing. We always want to make sure that we obey our trading strategy, avoiding decisions based on greed or fear. And let's make sure that we're never looking back or stopping once our trades have commenced. If everybody is all ready to go for this morning's session, you can hear me loud and clear. Drop me a huge one in the chat. Let me know that we are all set. Good morning, everybody. I see the good mornings coming in. I see the ones. All right, so this group is ready. So let's get down to business, right? We could close this out now. We are done and heading over to trading economics. So yesterday, we could see that the CPI, right, for the United States came through hot, right? 0.3% was the forecast, came through at 0.4 for the core CPI month over month, same thing. And we came in at, for the year over year, 3.5 on the forecast of 3.4. So everything came in above forecast for the United States. If we move over real quick and take a look at trading economics, look at Forex, look at the DXY, we can see that the dollar index held near 5-month highs at above 105 on Thursday after rallying 1% in the previous session. A stronger than expected U.S. inflation data stoked worries that the Federal Reserve may keep interest rates higher for longer. In March, the U.S. inflation rate accelerated for a second consecutive month to 3.5%, slightly exceeding market expectations of 3.4%, while the core rate held steady at 3.8%, defying market expectations of a slight slowdown to 3.7%. On a monthly basis, both indexes were up 0.4%, also surpassing forecast of 0.3%. Investors now look ahead to Thursday's producer price index report for further insights on current inflation trends. Markets now expect the Fed to hold rate steady in June and see only 2 rate reductions instead of 3 this year. The dollar strengthened across the board, with the most pronounced buying activity seen against the Australian and New Zealand dollars. Well, right? Something that we've been following and tracking closely, reading the different opinions from Fed members, right? And yeah, we're not out of the woods yet in regards to inflation, right? So it spooked the market a bit. When you look at the market technically, right, some of the indices and things like that, they were at some pretty high levels. That's what we keep saying. And there's a possibility for a correction coming. Well, this narrative kind of plays right into what we were talking about. So we'll see what happens today with the data for the producer prices coming out. So we'll continue to keep an eye on that. Bank of Canada yesterday decided to hold rates. That's what was expected. No surprises there. I haven't had a lot of time to read the details in regards to the rate statement and the monetary policy report on that. So that's something that I still need to do. Crude inventory is down, right? 5.8 million. So we'll take a look at oil, see how that's impacting that. And moving on to today, right? 8:15. We knew this week was going to be central bank heavy with rate decisions So we see that the ECB is expected to hold rates at 4.5%. We'll see what the forward guidance is. That's always important. And then we'll make sure we get it posted in the group, the link for the ECB conference to hear what President Lagarde has to say. We've got a couple of FOMC members speaking today as well, so we should see some volatility. We got a 30-year bond auction happening today. We know the bond, the rate on the 10-year moved up as a result of what happened yesterday with the CPI data there. Moving over to trading economics, just front page. Of course, what we just talked about, ECB expected to maintain steady rates. And anytime you have a major ECB or central bank decision, you typically will see where shares in the stock exchange for that particular country is muted, not having the decision, that pause, right? So we'll continue to see what happens there. This one here, Australia inflation expectations highest in 5 months. So consumer inflation expectations in Australia were up to 4.6%, right? And that all plays into rate decisions. All right. So that's that. Ryan, good morning, sir. How are you?
Good morning, bro. I'm doing well, man. How about yourself?
Doing great. Always glad to be here with you and the rest of the team.
Yes,
What's the
sir.
latest on Japan or anything?
Oh man. So they put out finance minister put out another warning yesterday, and the market didn't respond to it at all.
Mhm.
So they haven't moved forward past that yet. But that warning is out there, and so we'll see how things go the rest of the week. But after what you just covered, I don't see the UJ slowing down, and the dollar probably won't slow down either anytime in the near future anyway. So that option is still on the table, and he reiterated that nothing is off the table. So they'll do what's necessary and use their tools to do what they need to do if they feel like they need to. So we'll watch and see. I'll keep a close eye on that part. Excuse me. To see if and when they pull the trigger. But like I said, with his warning, there was very little reaction from the market. So they're continuing to push that thing to the upside with no worries.
Yeah.
Then, excuse me. The other thing I read was on the Bank of England, and Representative Green made some statements yesterday because the Bank of England was expected to have 3 rate cuts this year as well, but her statements were more along the line of rate cuts being distant. So the market is starting to price in 2 rate cuts out of the UK instead of 3. And we'll see how that ends up playing out. But that was conversation from yesterday as well, that that could impact the pound in the coming days. Yeah, I think that's it. Oh, the situation out of
Yeah.
Iran. We talked about it yesterday morning.
Mhm.
It was a U.S. report that basically said a missile strike is imminent. So from Iran to Israel. So that's something that I also have my eyes on as well, just to monitor that situation. That that's going to have an impact on oil and continue to push oil to the upside. So something in the background there as well.
Got it. I appreciate all the updates. Yeah, I was listening to Bloomberg earlier this morning, and I heard that news on the pound as well. Um, So, everything kind of following the same narrative, right? In regards to inflation and the number of rate hikes, so
Yeah,
uh
yeah,
yeah, and just I think it just continues to, follow the same, right? Don't bet against the Fed, don't bet against
exactly.
these central banks for the most part. And I mean, but it's amazing how, but I guess, firms and things like that, they have their own experts on the data, but I think, I have to continue to place my bets on the central banks when it comes to
Yeah,
these decisions, because so far I think the market hasn't been right in that in
having
that in that in that regard, and we know it was some weeks ago now that Atlanta Fed Chair Raphael Bostic had called for just one rate cut
yep,
this year
yep.
here in the United States. He said it from the beginning, you know. Um, so the emotions continue to fly in all directions in regards to when those rate cuts will occur, if they occur at all. So we'll see. And then just playing into your narrative, what's going on with Iran and uh, possible strike on Israel and things like that. You can see here, right, where it's got Brent holding above $90 on geopolitical risk. So,
Yep.
playing right into what you're saying, in that in
Yeah,
that
and
regard.
that
So,
that that too,
mhm.
right? With oil puts the upside. That's part of the reason that inflation is moving up, right?
Right, right.
So going back to the whole story, right? So as that continues to happen, why what would give the Fed any reason?
Hmm.
If the tensions
So
continue to stay high, oil continues to push up, we stay in the same situation.
I agree. And the PPI data coming out today, that's key, right? Because if producer prices, right, go up, that gets passed on to the consumer most times. So continue
Yep,
to
exactly.
continue to have a challenge there. It's sticky. It's sticky.
Super
It's
sticky.
sticky. You know, um, and the job market is still hot and heavy. And that's typically in the past, a lot of times that's what needs to break. Sorry to say, you know. Um, but we'll see, right? You got to get that money out of circulation somehow. So we'll continue
Yeah.
to watch everything. So we knew this week was going to be a super busy week. Lots to talk about fundamentally. Any questions, anybody, in regards to the fundamentals and what's going on? All right. No,
Yes,
one
sir.
no from Joy. All right. So yeah, and pretty soon we'll be crossed over into the summer months, and things will really get hot and heavy in regards to these elections. So there's a lot more to come in regards to the fundamentals and all of the different factors. So let's move on over to the chart since we don't have any more questions. And take a look at the DXY. So we still have the bullish dynamic crown on the DXY still moving up, right? Just over 105, right? Coming off of that right tip. Uh, that's been a beautiful move. That's been a beautiful move. So dollar bullish, fundamentals and technicals coming together. Any questions on the DXY? We know why it's moving up.
Yes, sir.
It says coming into the D extension. Yep. Yep. For sure. So
I
all
do
right,
have,
we'll just
can I?
go ahead.
Hi. Um, so in looking at the fundamentals and seeing the dollar um, rise, how, if you can answer this question, how long can we expect for that rise to continue to happen? Like, when can we expect either a retracement or a correction?
Oh, that is always the magical question, right? In the markets,
Okay.
as to how long it'll sustain itself. The only thing that we can project is, hey, eventually we look forward to move to a D extension. How long
Okay.
it's gonna take, we don't know.
Okay.
What'll cause the corrections in between. Like you can have a PPI report that comes out today, that kind of provides some relief to the market. It could be, it may have an opposite reaction depending on the details of that report. So that could cause a temporary correction. But the way things are shaping up, just with a lot of the fundamentals, I'm looking forward to continue. I'm looking forward to continue. You can kind of track. So this is a daily chart. You could kind of, move to your lower time frames. Like we could come into a 1 hour from a fundamentally, it's always hard to know, timing wise, but technically, you may be able to come down and see, okay, well, we may see a correction at key technical levels, key Fibonacci levels. That could be a way that you can gauge it. But as far as the timing, man, if I knew that, I'd be a billionaire on these charts, if I could call it like that. You know, it's a great question. And that's the beauty of the game that we play. Moving in here, right? So at some point we'll see some relief, right? We know a push up to that 118, 127 zone. You've got key resistance levels there. You may start to see a correction. You may start to see a correction, like I said today, depending on how that PPI comes through. Right. So hard to tell. We just know that the way that fundamental data is aligning, it's aligning for it to move in an upward direction for quite a while. Would say, what would you say, Ryan?
I'm in agreement as far as it continuing to move to the upside with corrections in between. Timing unknown. You and I had an interesting conversation the other day, and in the midday meetup that JC hosted yesterday, Jeremy was talking about his study on the fundamentals. It's one of his big things that he's focusing on this year. And the conversation you and I had about when those key fundamental things change with the currency, taking the trade and allowing the trade just to run. That's what Jeremy talked about, and that's what he's done. And so I say all of that to say it all comes down to just watching the fundamentals, the key things that each central bank discusses and says that's important to them and what they're keeping their eyes on. And when those data points come up, taking a look at the market to see if it's coming into a key resistance or support level, right? So that's kind of as close as we get to knowing is watching the reports and seeing how those reports come out in connection with key levels and key fib levels. So, but Jeremy's also seeing the same thing that you're not talking about, bro.
Got it. Yeah, and also too, like when looking at those fundamentals, it's you always have what's forecasted, and a lot of times what really drives a major push in a particular direction or even a complete reversal is when that data comes out well above or below what the market expectations are. And that's what can really, like that. With the dollar was already moving to the upside for some of the fundamental data that had come out. But now with the hot CPI report, and we know the major driver, of the currencies are interest rates. And when you see, so when you look at one of the most impactful things that weighs heavily on making for the central banks making the decisions to either maintain, raise, or lower rates. It's inflation. It's inflation. So you have to have price stability, right, in the market for an economy to work. So those type of reports can have a lasting impact, on the direction of the currency for quite some time. So, and then you're when you look at maintaining rates, bond yields, and things like that going up, if I can get 5% on a 10-year, right? So think about that. If you're a big money millionaire, don't even have to be a big money millionaire, but just put your investment hat on. If I can lock in 5% on a bond, right? That's back, you know, by the full confidence of the U.S. government, or I'm just using the U.S. government in this example, the central bank. I lock in 5%. I'm going to allocate some money to that, right? Because that's a safer play than the stock market. That's risky. I could get 5% on that. Everybody follow me on that? Yes, no? Right? Yeah. So I'm gonna shift the narrative a little bit on that. I'm gonna shift some money into a safer play and take some money uh out of the market, right? I'm gonna pull, I'm gonna reallocate some of that money, right? It's all about, I want my money to grow, but I want to preserve capital too, right? So we see on the US 30. Okay, so this is technicals and fundamentals coming together. We've been saying for quite some time, we had a beautiful, on this daily chart. Okay, doesn't matter the asset class. We had a beautiful, right, ABCD wave here. Doesn't get any better than that. Okay, that's textbook. Right, extensions are hit. Okay, extensions got hit, and we're saying, hey, from a technical perspective, right, Dow 40,000. That's getting pretty high. Technically, we're at 80-20, right? That's a sign that we may see a correction soon. So then when you take the technicals and you combine it with the fundamental narrative, with the strong dollar, money is expensive to borrow, right? We've got a correction going on the US 30, right, in your indices. So that's how it all comes together from a longer swing trading perspective. Look at that. Look how that came right into, that's got to be a point, you know, within that D extension. Higher time frames control to the lower time frames. Look how that crashed back down. That's a beautiful move to the upside too, on a 4 hour chart. But when it's time, right? Look at this on your weekly, on your monthly chart. Hitting all-time highs, at some point you're gonna see some relief, right? So if we go and we take a look at the S&P, right? Come on now, right? We got corrective action going on, right? We marked it up weeks ago. Hey, we're stalling. We're moving up in this level. We're gonna start to stall. Okay. And so let's see how that CPI data uh comes out for us today. Okay. Where's take a look at the NASDAQ. Okay. Daily. Same thing. When you have a process and a systematic way to go about things and have a consistent framework, you start to see the patterns. Okay. You start to see the patterns. Okay. That's three indices that have pretty much done the same thing. Makes things a little bit easier to trade, right? From a swing perspective. Any questions on that? Let's take a look at the German 30. See what that's looking like, right? So you can see how, I mean, the markets went parabolic. This is a weekly level, which you had an extension hit. Okay. I'm gonna make this stuff up, right? So if you're just a buyer of markets, you use these levels to say, you know what, I might not want to keep buying prior to another correction occurring. You can see that this is starting to turn over. Look at how the market was accelerating, right? That's a 236. That tells you the bulls were in complete control, right? That only corrected 23% on the daily and shot. Now we've got a correction coming. Okay. All right. There was our breakout play. See that? How we were sitting around? It's a while ago now. How we were sitting around that 80-20 and it just kept ranging. And we said, hey, we need a breakout. If it gets below that 16,358, we look for a continuation down. If not, look how it broke out. Okay. So we'll see what continues to happen. But in the meantime, right, I'm continuing to track the data on these lower time frame charts on the 5 minute. I've got to come up with a systematic way to get to these consistently, market them up, and they're playing out. So that's the next point uh, that I need to get covered in my journey on these 5 minute time frames. Is just once I get the consistency down in regards to being able to identify, take the trades on these setups on a consistent basis, I'll be in there and ready to go, right? But I've got to figure that out in regards to lifestyle, right? If that's even possible. So I'm gonna move through these pretty quickly. So you can see that, right? The narrative, the longer term swing trade narrative on these Swissies, right? We've nailed it right on the money. They're long, right? So overall, looking for opportunities to get long. We spotted that a long time ago. Not only when the S&B made the surprise rate cut, so that's a prime example there, right, Ryan, where a major fundamental shift. So first, you had where to prop up the strength of the currency, you had the Swiss National Bank, where they were decreasing their foreign currency reserves, right? So they were exchanging every central bank holds a certain amount of foreign currencies, right? They have it on hand. So they were just decreasing their foreign currency reserves before in exchange, for Swiss francs, which pulled Swiss francs out of circulation. And what does that do? That strengthens the currency, right? Because they were trying to support their economy against, rising energy costs and things like that. So they pumped up the franc. So that's what a lot of people call manipulation, right? So they pumped up the franc. Well, it came a time where that period was over and they started to increase their foreign currency reserves again, right? So that started to decrease the strength of the Swiss franc. But then on top of that, they came with what many saw as a surprise rate cut. Okay. So now that's been, I don't know how many weeks that's been now, right? But for the most part, that's caused, right, that Swissy to weaken. And so most of your currencies have been moving long against the Swiss franc. So you can take, if you're willing, like Ryan said, Jeremy, other people in the group really focusing on fundamentals this year for those longer swing trades. that it's an asset class like anything else. So if you could tie the technicals and the fundamentals together, you can buy and hold positions on your currencies, right? If you do your case study, you put together your framework and your case for, hey, I'm long against the Swiss franc, and you take it long, right? And then you look for opportunities, you know, using the fibs, using key support and resistance levels on the corrections to continue to add to your trade idea and to your narrative. So you can see on this Aussie Swiss, this has been moving long. Right? This has been moving pretty long for the most part. All right. Now, all right, you just have to decide, hey, as a part of my trade plan, you know, where do I want to add to my position? All right. Well, maybe you like adding to your position off of the deep pullbacks, right? That's all going to come down to your trade plan. Some people say, hey, I traded 382, I'll add to that position there long. And then you can look to hold those positions, right? So the narrative continues with long against the Swiss franc. This is a 1 hour play, right? We got a lot of bouncing around on this one, but this is the recent. So we know that it's been moving long way before this current 1 hour fib, but this was the last play on the 1 hour to the upside. Okay. So we're looking for a continuous move long. Any questions on that part?
Okay.
All right. And that's where you become like, like a lot of stock traders who use fundamentals where they're doing the research on companies, right? And building the case to why I want to buy and hold Google or Meta, right? And where like, hey, I'm looking to just add to the position on the corrections because of the fundamentals regarding this particular company. You could do currencies the same way, right? Like the yen. You could have been sitting long yens for the last 2 years. And these are things that we learn as traders, right? As we continue to evolve and you become better with the fundamentals. And I hope everybody, sees the advantages, of as a swing trader, right? As a swing trader. Now, if you're day trading on the lower charts, you want to be aware of the fundamentals of the day, and what's going on, because you can get and I got reminded of that a couple of times over the last week or so, working on these new setups on a lower time frames, that I got a stark reminder of that. But you can you can see how fundamentals, especially as a swing and a positional trader, give you a huge advantage. So then you're not, if you're just, like a lot of times with stocks and things like that, people are dollar cost average into a position because they're looking to buy and hold, right? Well, you can do that with these currencies too over the longer term, if you build a strong case for yourself fundamentally. So that's the Aussie Swissy coming down to the 5, right? We can see, right, how these play out. Okay. These play out. So we got a TP1 on that on the swing, right? Okay. Put 27 pips on the Aussie Swiss. Moving on to the Aussie Yen. All right, moving on, right? Continuing long. Okay. That's moving long, right? So you put this low in 2020. I said 2 years. That's 43 3 years, right? Well, 4 now because it's March. So 4 years. I take that back. 4 years, right? That's been moving long. That's amazing. And in between that time, right, they've intervened. they've jawboned, they've threatened, to intervene, and all along the way, this has still been moving long, right? So that's from a weekly perspective. Where are we now on that? Right. So just continuing to move along. Okay. Was that 107? Right. Is where that could head. So just a continuation of the trend. So once you get that, you're directional biased, right? Then you can start to say, okay, well, based on, my key sweet spots, you know, where can I have an opportunity to enter this trade, right? This is a beautiful pullback to a 50%, and it's just continued to run long. Right? It's just continued to run long. Stand above trend line. That's been a beautiful move on the Aussie yen, right? Here on the 4 hour, we've got a 382. This was the previous extension that got hit here. That's why I have that line there, right? So eventually, all right, let's see if we can get to that 161.8. That's 102, right? And right now, that's coming off of 382. We'll see if it wants to continue or if we get a deeper correction that's off the 4. All right. So hopefully you guys can see you're really starting to tap into, when you're swing trading, how you really have an edge and an advantage understanding the fundamentals. Right. Okay. The one thing, right? The major thing and it's really on any time frames, right? Because we have some folks, right, include myself from time to time, it always creeps back in where you're trading on a lower time frame and you're still jumping out of trades prematurely, right? That's the psychological part of trading, right? And you only work on that and get better at that with time, right? That's a time thing. That's something that's definitely not going to happen overnight. So still long. If we come down here to the 5, you can see where we pressed into it. We pressed into a target there on the 1. Okay. Now, things that I'm learning with these 5-minute swings is that I'm doing far better with leaving that stop wide. And I tell you why. It's because with us using the fib sequence, even though this is on a 5-minute chart, oftentimes, right, I'm still not ready to close that trade out at the end of the day. Okay. So you can see how this is coming to another day. That's this blue box that you see around there, right? Yesterday, today. Okay. One of the things that can happen, now keep this in mind, is that hold on a second, 4-hour 80-20 play. No, you've got price reached to 382 already. All right. Price reached to 382. If we remember at 80-20, right? Anything 236 or less, right? Prior to breaking the B boundary. So for this to be at 80-20, you would have needed, right, this to pull back 236 or less, right? So anything less than a 382, right? We hit a 382 on that. Okay. Now, can price push up to this level because it's a strong level and react back to the downside? It can, right? But we have to have rules as we'll trade everything. Okay. But we just know that anything less than a 382 and a break of that B boundary, price has high probability of stalling, right? Moving sideways a bit and coming back down for a deeper correction, a bigger discount, so to speak. All right. All right. Great question. Okay. So this is where we are, right, on that swing. Okay. TP1 hit. Okay. TP1 hit on that. Any questions on the Aussie yen?
No, sir.
All right. So what I was saying was leaving that stop loss, keeping it tight, it costs you at the end of the day. So when the spread spikes, which I can't stand, when traders, and the reason I do that is because a lot of day traders are closing out positions, right? Spread spike because you got a liquidity issue and you get stopped out. Like I sent Ryan a screenshot of one the other day that was absolutely ridiculous. Like it didn't even look right on the chart where where my entry was and where it got stopped out because of a spike at the end of the day. Like it was horrible. So let me see. Right. Right. 67, right? So like so when you move that decimal point, right, it's like 36.7 pips. Crazy. And I'm on a 5-minute chart, right? So just some of you guys have been day trading for a while or trading on a lower time. You know this, but this is some things that I like I said, I got some pretty bad reminders trading these setups. And then also of course um if you've got trades running and you're using the lower time frame, you always want to be aware of major data, which I was aware that New Zealand had a rate statement. They were expected to hold. We got a spike in the market. The trade was going awesome, and then all of a sudden I'm stopped out, right? Because of the reaction that happened in the market, then it recovered. So those are just you learn from it, you trade through them. But those are some differences. Whereas on a higher time frame, for the spike that occurred, it gets absorbed. It's no big deal. So coming off of swing trading for so long, some things I just totally didn't think about. So that's that on the Aussie dollar. I mean on the Aussie yen, Aussie NZD. Okay. This is the main one, right? Woo. Starting to pay off. So we pushed up into our 80-20 zone. We went a little bit beyond it, which we spotted that, right? You got a monthly level that it might chase. And so far, we got a pretty nice reaction at that 109.40 level. That's black. So that's a monthly level that we're reacting off of. So just having that patience, having that patience, the market was trying to tell us something, at that level. It was trying to tell us something at that level with that evening star. And the fight just continued for a little while longer. And then it collapsed, right? So now we're moving down. So we have some good confirmation with the 80-20 zone monthly level within that area. And then this trade is now moving down. So we'll see, right? This is typically a pretty slow mover. It's a grinder. So it had to grind to get to that point. And now we see it moving back down. So that's another 84 pips that it has to go off that level so far. At the low, looking at was that 48 pips or so, close to 50 pips on that move for the swing. So far so good on that Aussie NZD. Any questions?
No, sir.
All right. That's been a good one, Ryan. Appreciate you on that one. Aussie dollar. I'm taking a look at it, right? Moving back bearish after the data yesterday. Right. So this is the daily swing, right? We pushed up beyond the 8.6, ran into the weekly level. That's where the sellers were parked. Right. And so now we've kind of just been in this range, bouncing back and forth, right? With this Aussie. The thing we have to watch out for, and you see how it's ranging, we got that bearish move after that CPI data yesterday. But this is key here, right? Australia inflation expectations highest in 5 months, right? So that inflation is sticky, right? So you're at least maintaining rates, but anytime, you get an inflation narrative like that, the rates become a concern, higher for longer. Is there one more hike, that can occur? So it's making this Aussie kind of sticky, right? So we're ranging, right? So huge impactful move yesterday with the dollar, but you can see how we've just been kind of stuck back and forth between that 66.23, 64.76 level since that drive down. So we need a breakout. We've got a stochastic, right? That's exhausted to the upside. So maybe we get uh that continuation down. Here we are on the 4, right? And this is just looking, see how it's just ranging, right? But we got to pull back to a 61.8. Well, my bet is for a continued move, to that downside, playing off of that dollar strength and that crown we have on the DXY. So we'll continue to watch it moving here on the 5. You're looking at where, right? We've worked our way back up. So we didn't hit that stop. We've worked our way back up to that 127 zone. So we're looking for to see, okay, if we can get that pullback to occur. Right? That's what we're looking for. Can we get price to pull back? Right. So that's that lower time frame correction play. So we'll see. We've got this is one of those ones where it's like, hey, I've got data coming up for the United States, so I don't know, right? But the technical setup is there, right? And go see we've got that pause because we know we've got that data coming up, right? So we'll continue to keep an eye on that one. Any questions on the Aussie dollar? Nope. All right. All right. Cash Swissy.
Benny, I think we'll get on the Aussie dollar, we'll get that buy because when you look at the dollar, it's coming into a couple of D extensions. I think it's on the 4 hour. The
On your
daily
4. Mm-hmm.
just got a little bit more to push on.
A little bit more to push up. Yeah, coming into it will be in some resistance levels soon too. So I'm
Yeah, the
hoping.
dollar on the daily, the up fib is
Mm-hmm.
coming into a daily resistance or D extension.
Gotcha.
So
Are you running it off? Are you running your fib off this low
yeah,
of the crown? Okay.
yeah.
Oh yeah, it's getting close, eh?
Actually, if we go before that, from the previous one, yeah.
Oh yeah. So we got a bunch of things lining up there, right? So we've got the sub fib. So we're looking at it. So let's see what happens with this PPI data.
Yep, so the 4 hour and the 1, it's coming
Mm-hmm.
into, it just hit a D extension in the 4, coming into that daily D.
Okay.
So
Okay.
we may have a pullback, once we get that 80-20.
For sure. For sure. And this is the 4. Yeah, I see that. Just pulled into it. Okay. 80-20 coming up. All right. So maybe we get that. Maybe we get that. So we'll see. Plan on the smaller time frame. You don't have a lot of distance to deal with, right? So so any type of a spike with that data that comes out can push it either way in a hurry. So we'll continue. Appreciate the heads up on that. Thank you very much. Thank you very much. All right. Teamwork makes the dream work. I love it. So moving on to the this cat Swissy. Take a look at this. So we've been pretty good off the low, right? Moving bullish, right? That narrative, long, right? Oil price, sticky, moving up for the most part. Okay, helps the Canadian dollar, long, right? But we are at some levels, okay? We are at some levels. So this may continue to push up a little bit higher. Here we are on the 4. So the direction is right. It's just a matter of where we are in our phase, right? So we're in a B to C move right now. And if we come down to the 1, right, I'm seeing if this trend line break is going to hold, because on a 1-hour chart, you can see how we hit that 118, 127 zone. And this may be trying to get back to that 382, okay, for a deeper correction, right? So we'll see if we get a break there and a continuation down off that level. Okay, so that's the cash Swiss. Continue to keep an eye on that one for a deeper correction to the downside, right? If not, then you're just waiting on the low price to see if you can get in for a buy, because we've got 2 daily levels in our buy zone, right? Once it gets down there, that may be beautiful, beautiful opportunity to get back long on the cat Swiss to continue to follow that narrative. Any questions on the cat Swiss? Hmm? All right. Not the cat. Yeah. Look at the Swiss yen. Cat yen is still right. Still trying to get long, moving sideways. We're almost to that 932 pip target, right? Just moving sideways. A lot of back and forth with the yen, right? That's causing that, right? A lot of with the rhetoric. So moving sideways there, but I would love to see it hit that projected target. It's been running for a long time, but that's another one of those, the buy and hold, right, from the daily time frame. All right, so that's the cat yen. The one I want to get to is the Swiss yen. On this higher time frame. Ryan, what do you think? I think that's gonna move to the downside whenever. I think it might pause until they make the decision, but if they ever pull a trigger, the Bank of Japan, that's gonna drop.
Yes, I agree, 100%.
Yeah, I've only been paying attention to this one from that weekly level. I think that's gonna make a move to the downside. So just wanted to check in on that one real quick. This is what I'm focused on here with this switch in, is a longer term play to make that move to the downside. So leave the position set on that. Euro GBP. All right, looking at on the 5, just wanted to review this one. But look, it plays out all time frames, even for a Euro GBP, Joy. It's a beautiful move. Right? Got us 2 TPs on that. That may continue to react to the upside depending on what the ECB, what they say today. What Lagarde says in a press conference. We expect them to hold rates, but it's always about that forward guy. You can see you've got a beautiful U-turn in the zone. So if you're trading CDDs on the lower time frame, I've been primarily focused on the 80-20s right now, you know. But that could very easily, make its way back to that 118 level for an extension on the swing. Right. But just again, everybody, like, training your eyes, and then you see a lot of these. I've had the daily encapsulations on, just getting an idea that helps you with your patience and your psychology of a trader. If you get an idea of, like, okay, how long could this move take? Because sometimes we get in a mind frame of, like, it's a 5-minute chart. All right, this is going to happen in 2 hours. But you can see that, following the framework, right, that it can run for a while. So, to kind of once you kind of build that idea, and that's why back testing and stuff is important and tracking the data, is because once you get an idea, you become a lot more patient. You're not checking your phone every 2 minutes to see if that 5-minute setup is hit target. Right. So you can see that even on the 5-minute, using this structure to trade with and this strategy, it still can run you right into the next day or so. But you can see that it eventually collapsed, right? And made his way back down, right? So out of that zone, what's that, 10, 14 pips or so. So Euro GBP, small play, but that one corrected. This morning it said, forgot. I forgot. Yeah, I'm like, man, I have my game plan with that tighter stop, but I'm like, oh, that's gonna get me. They still have an edge, in regards to profit, but that's gonna definitely get me stopped out more dealing with, what's going on at the end of the day and stuff like that. So, wide stop. Go through a couple more, then we close out. Euro Swissy. Just checking in on that. Just continuing that long narrative, right? That long narrative for the most part. Get long. We can see here on the 4, right? It's dancing around. We've been above cloud, so that position has been pretty good. But you never know what's going to happen. At 8:15, you can see it moving around. Folks jockeying for position, and then this 1 hour setup, right, is one that's been looming. Like, that's all types of wacky price action there. We've got to get above and stay above that 98.21 daily level. That's where we're having the issue. But so far, the swing has been pretty good with the exception of where we are now. But you can see here and in this area is struggling at that daily level. Right. But continuing to the longs against the Swiss franc. Of course, that can change if you get situations. We know that the Swiss franc safe haven currency, geopolitical issues escalate. We know that capital can move, quickly into that safe haven type of environment, risk off type of environment, which can strengthen that Swiss franc. So that's always something I keep in the back of my mind, but looking for that to eventually continue out. So hopefully it does. The Euro JPY, we know the situation with the yens, but just from a 5-minute chart perspective, we can see, right, where here recently, right, we can see where that 80-20 played out. Right. So again, right, the wider stop, letting it do what it's gonna do. And we can see here with a daily encapsulation, that's what, 1 day, right? Then it continued to carry through. And here we are today, right? So that's one, that's another one that played out. Well, I'm doing a lot of this back testing for this, right? Almost 50 pips to that TP1. Okay. Then take a look at this Euro USD. Here on this 5, right? So we know price is moving down big time, right? We know it's moving down. It's a beautiful price swing, right? Just collapsing. Okay. Just collapsing. So here though, right? And again, we've got news coming up, right? But we can see, look at that. That's 5-minute, everybody. That's a 5-minute chart off the swing. It's a beautiful move, right? I've since moved these targets over here, but that was an 80-20 And now this is where we sit, right? So depending on that data, you can see how it's just moving sideways. This is what we mean when we say sideways in an 80-20 zone, right? Just that consolidation, right? And waiting for that breakout. So that's where we are on a Euro USD. Any questions over anything that we covered today?
Yeah, on the euro, can you take it up to the weekly time frame? Weekly time frame is going up though.
The weekly?
Yes, sir.
Yeah, it's just bouncing around. You see it?
Yes, sir. I do.
Yeah. Yeah. So you can see this week is just
Also on the
bearish as
weekly
it,
time frame.
huh?
I would say also on the weekly time frame, you got an 80-20.
Where you running that from the up to from the bottom?
Yes, sir.
Yes. Yes. We were talking about that yesterday, Ryan. On that. All right. So you see that? Okay. You got all types of action going on there, right? Ryan had covered this, right? You got it. You got your crown type action there. There's your right tip. Okay. So we break that 107.24 level, right? It's probably good night for that. But it depends on, right? We've got data coming up. Okay. This market's bouncing all over the place. You know, then Euro USD could be tricky for sure. But that's 107.24 there. All right. So we shall see. You can see that's okay.
On the 4 hour band, he's coming into a D extension. So probably like 5-6 pips.
5 or 6 pips, right? So there we go. There's the larger crown, right? And we'll see if we get that break. Daily stochastics in the sell zone. The 4 hour, where are you running it off of the top here?
Yeah.
Oh yeah. Getting close. .net is on it. That's twice today, .net with these extensions. Right? It's 2 times. 2 times today. Dropped .net some sevens. Playing them sub fibs. Masterful. All right. All right. So yeah, let's move it down. Let's see what the reaction is though with the data today. All right. So one too long ago, right? That was a beautiful 80-20. Swung off that zone. All right, now we're moving. Now we're continuing down. All right. Higher time frames control the lower time frames. Right. Anything before you wrap up, sir?
Great session, bro. No, just continue to be patient with people. Continue to pay attention to the information that comes out, and keep digging in. You guys are doing a phenomenal job of challenging yourselves to advance your skill sets in the different areas that you are on your own individual journey. So, kudos to you for that. And yeah, we'll keep an eye on 8 o'clock and watch for this rate statement, and then once there's a link, I'll post that for the press conference, and we'll see what Christina Lagarde has to say.
All right. Right. I wonder, on our site, right? They'll probably be able to watch that on Bloomberg.
Oh yeah. We'll be able to watch that on on the economic calendar. Yep, we'll be able to watch that there. Yep. I apologize.
Yeah. I almost forgot about that too. So, all right,
For
everybody,
the community
enjoy.
members, you can click on the resources tab inside the community. Click on the resources tab. The economic calendar is there, and you can view it right there. You don't have to leave out of the community to do it.
Bam. Come on now. This is the Forex trade room. I guess I'm the only one that's hyped. It's all right.
No, I'm with you.
Everybody, have a
Okay. How do you get when you click on the resources? You click on the calendar. Is that the calendar?
yeah.
Oh, okay.
There's here's the blog. Yep. Here's the blog, and here's the calendar. So, damn, look at that. Economic data, economic news, yesterday, this week. Don't even have to go to Forex Factor if you don't want to. You can stay inside the community. right? So there we go, right? Hit play on that, and you can see, right?
For this bureaucracy, environmental reviews that could potentially make
Damn,
this a
that's what's
long-term
more.
process and not as quick as, say, you
All right,
and
everybody.
residents of Maryland want to
Have
see.
a great day.
Do you agree with him that this